Hello, coconuts. Today in TFC Stock Geek Out, we're going to talk about a company that is the world's largest home improvement company. It's benefited massively from COVID, but the story may not be over. Come join us today in dissecting Home Depot. Joining me today is Timothy Phillips. Tim is the head of content and investment lead by ProsperUs by CGS-CIMB Securities. He has worked in various roles like the Motley Fool. For reference, this episode was recorded on 24th March 2022. Our discussion today is solely for education and entertainment purposes. It does not serve as any form of advice or recommendations. Thank you for loving what we do, and please subscribe so we can get even bigger guests. Now, let's geek out. As we kick things off, why don't you explain to us, Tim, tell us a bit about yourself other than what I've said earlier, and maybe a bit about ProsperUs as well.
Sure. So ProsperUs is effectively really a digital investment platform, and we're trying to reach out to everybody in Singapore to sort of get them to invest responsibly longer term. And we've got lots of access to different markets on different exchange as well as different exchanges. So we have access to about 30 different exchanges across 11 markets. So I think that is something that we really want to push, is that we have the global access for investors if they want to go out and invest and long term.
ProsperUs an app? Is it a platform? How do we sign up?
It's actually a platform, so you can either sign up via the web at prosperus.asia. We also have an app on the iOS store and on Google Play. Basically, it's just more about opening an account. Obviously, for Singapore exchange stocks, there are no minimums actually, so we don't have a minimum for commission.
Yeah, awesome. I think we'll put this in the link below. So if you're listening through, just click through. You'll be able to find out a bit more as well.
Yeah.
Awesome, Tim. All right, so today we're going to talk a bit about Home Depot. Kick us off. What is Home Depot?
So Home Depot is actually the world's largest home improvement retailer. So think of a self-fix DIY in Singapore, but on steroids, times that by like 100 or 1,000, and that's probably the kind of store size you would get in the US because everything is just supersized there. So they have about 2,300 stores throughout the US, Canada, and Mexico, I think, as well. So they have a pretty strong presence in North America, but it's mainly confined to North America. And they're the leading home improvement retailer. So everything you can imagine. So plumbing, electrician, anyone who's a pro builder or home builder will go there to buy their supplies. Will go there to, buy lumber. Will go there maybe to buy anything that needs fixing in the home. So it's basically just an all-in-one shop for anything that has to do with home improvement or to do with decoration. So it's really been a big sort of part of the US retail scene, mainly because obviously we know how big housing in the US is, right? So I think it's the leader in that space.
Got it. So tell us a bit about that scale, right? You mentioned it's a leader in the US in this market for a very big market where it's the US, people are effectively going there to build it themselves. Maybe give us some numbers. How big is it?
In terms of the actual total addressable market for home improvement, it's estimated, or Home Depot estimates it to be around 900 billion.
In the US?
In the US, yeah. So that's just in the US alone. And so if you're thinking about the actual sort of market share of Home Depot in that space, they've only got about 17 to 18% market share. So even though they're the top and they're the top dog, so to speak, in that space, they still don't have what you would consider a really dominant market share, maybe upwards of 30-40%. So there's definitely still room for them to consolidate, I think, their market share and grow their market share over time.
Wow. Got it. And, Home Depot, maybe talk about the logistics, right? Because are they in all the different cities? How do they operate?
Yeah, so I mean, they are across the US, obviously mainly in the US, and I think obviously sparingly in Canada and Mexico, but effectively what they have done over the past decade is really build out their omni-channel capabilities, and you hear about this all the time, about omni-channel, but I think Home Depot really represents that very well because they've really taken the time to invest into their digital capabilities, their in-store pickup, their curbside pickup. And so when the pandemic came, that really helped their business because they'd already made the investments prior to, obviously, everyone staying at home and then having to to go out and or having to order things online or maybe pick things up without going into the store. So what they've done is they've been really smart about building out their digital capabilities across the US, and so that kind of comes through in the sales as well, right? So I think in the last fiscal year, 50% of their sales that they made online were fulfilled through one of the stores. So I think it really allows, it really gives the optionality of either, it gives the power to the consumer. They can decide whether they want to go pick it up or whether they want it delivered. And so I think that's a really key aspect of their business and how they've become so successful.
Wow. Okay. So this was during the COVID period, right, that we spoke about?
Yeah, they were big. I think they've always been a bit bigger than the competitor. So they're number two. I think, probably, I don't know if investors have heard of them, but Lowe's is the number two competitor in that space. And Lowe's is a bit more geared towards the individual DIYer. So their pro business isn't as strong as Home Depot. And so that's been, I think, a focus that they've always just had. They've always been the top player in the pro section, Home Depot. And that's led to them obviously having, I think, higher margins and just bigger revenue growth as well. Because they were considered essential stores by the US government, they actually never shut during COVID, whereas a lot of other stores did close their doors and they weren't allowed to open because there were lockdowns. But because Home Depots and Lowe's were actually considered essential, they were allowed to remain open. And obviously costs rose a little bit because there were extra precautions taken with staff and, social distancing, et cetera. So costs rose, but because they already, as I said, had that digital capacity in their DNA, so to speak, already kind of installed, it was a lot easier for them to handle the online demand and handle, the store demand as well, because there was a massive spike in demand for people who were staying at home, who wanted to improve their home, who were maybe looking to move somewhere else. And so I think this is a structural theme. I think one of the key things is that, there's always this stat that's thrown out there about Home Depot is in terms of, the bull case is that over half of the US housing stock is over 40 years old. So there's a lot of work to be done, right? So there's a lot of housing in the US that's actually very old. And that needs work, and it constantly needs work. And so if you do make improvements to it, whether you do it yourself or whether you get someone to do it for you, most likely they're going to be using Home Depot or Lowe's, one of the big retailers for home improvement. So a lot of these home builders, they're actually home builder companies in the US. They're starting to build more as well. And obviously the construction and the pros that construct these homes, they'll be using Home Depot type of tools and equipment. It's one of those companies that I think has really withstood the test of time, basically on merit, obviously with its strategy, but also its size, its scale. So I think that's something that really makes it stand out among competitors.
Do you have any numbers for us? Like, is this sort of increasing in terms of addressable market over the last few years? Anything like that?
I think it's probably... Yeah, I think the addressable market has probably increased maybe 100 billion over the past 2-3 years. But there's also a lot of different product categories where they're coming up with ideas. So, for example, Depot is starting to do a lot more tool rentals. So they're starting to rent out tools to consumers rather than maybe just selling them. And if you think about the recurring revenue from that one piece, instead of it being one massive upfront cost for a piece of equipment, and it's just renting, because maybe if you're a DIY or if you're just a consumer trying to buy something and do something, you might not need this particular tool for 5 or 10 years, right? You might just need it once and then you're done. There's a lot more property that is being refurbished or retrofitted to become maybe sort of more geared towards life sciences or data centers or, other areas as well. So I think those are areas that we don't really think about maybe as investors, but those are things that we should definitely consider, is how property and real estate is changing, and if that is also an area that Home Depot can tap into, and I think it probably will be.
Got it. Cool. All right. So we've discussed a little bit of that industry, right? It's a growing growing market, so on and so forth. So why, if I am in that industry or in that sector, why should I choose Home Depot? Why not its competitors?
David Gunner is the founder, co-founder of them. We'll talk about buying the leaders, buying the winners, right? So I think winners win is what he likes to say. And so when I think about how I invest or how I pick stocks, is you don't necessarily want to get the laggard. You don't want to get the number 2 or number 3. That's how I see it with Home Depot. Home Depot is the biggest. It's, the baddest. It's really just got everything. And it's got the best profit margins. It's got the best sort of average ticket size. It's just really the top dog. And so when you think about why you want to buy this company or why you want to buy that company in any particular sector, I like to think I would buy it because it's proved itself over maybe 5 years, 10 years, and it's proved itself to be the leader and be the winner. It's a bit higher valuation, but you are paying for that quality, right? I think that's the key. And so for me, it's really just owning the leader, owning the winners, because I think those tend to keep performing.
It looks as though it is, right, the way that you look at it, they're given like A, I think, with regards A minus, with regards to their management.
Yeah.
And I do want to talk about that, but just before, I think it's good to mention that, what you spoke about earlier with regards to COVID, and that switch and that pivot and that investment that they did in digital technology to then sustain and grow even during COVID point in time, it shows that, they have some foresight. They could see these problems and they could therefore look to minimize the risk by pulling out investments in the digital strategy space.
Yeah.
So I think that area of them to pivot and view sort of the future is quite important for any sort of C-suite or any sort of investor, at least for me, right?
Yeah, no, exactly. And I think, I did want to mention something, maybe I forgot to mention earlier, but it's just a little stat about Home Depot in terms of its e-commerce market share in the US. It's actually the 5th biggest e-commerce company in the US in terms of as a percentage of e-commerce sales. So obviously Amazon's at the top, and then you have, I think, eBay, and then Apple, and Walmart, and then 5th is Home Depot. So Home Depot's got a 2.2% market share of e-commerce in the US, and that's, I think, sort of a vindication of how successful its digital strategy has been. Yeah. And Lowe's isn't anywhere to be found in the top 10, right? So even Home Depot, ahead of Target, which is one of the biggest retailers in the US. So I think it really shows just how much effort and how much success they've had in the digital space that they're able to boast that they're in the top 5 in terms of sales, in terms of market share for e-commerce. Yeah.
Yeah, no, for sure. And, as a person that's selling marketing software, that is great. Coconuts, for your listeners out there, yes, I do work at a marketing software company. So it's always good to find out that it does work, digital marketing. Awesome. I wanted to also just ask you, right? You mentioned the new incoming CEO. Was he a CFO or was he a COO?
Ted Decker, I think he's CFO actually. Yeah, so he's become now CEO and president, right. And so I think previously he was maybe CEO, maybe chief operating officer. Yeah, chief operating officer actually. Yeah.
Okay, good. Yes, I'm just looking at LinkedIn. It looks as though it's COO previously.
Yeah.
Yes, and okay, so for me that's less of a red flag, because when you mentioned CFO, for me that's a big red flag if a CFO becomes CEO.
Yeah.
Because then mainly he's looking at cost cutting. So what are we not seeing, right? Right. So I think that's definitely. I think Peloton, the CFO, just became CEO. So.
Oh, did he?
Yeah. So that's a big red flag for me. Okay, good. COO moving into CEO is usually the correct way. At least that's one of my biases, if you will, right, or confirmation bias, if you want me to look at it that way. In terms of the investment. Nice, and he's been around for a very long time as well that you mentioned.
Yeah, he has. So he's Why do you? Sorry, it's just CFO. What's the red flag there? Just out of curiosity.
Yeah. So maybe because of my accounting background or whatever, but when a CFO, and if you look at history, CFO moves to a CEO position, it's
Yeah.
probably because you need that mindset of cost cutting. You need that mindset of increasing the margins, right?
Right.
So for me, that's the layer one, right?
Okay.
Because that should be already handled, not at
Yeah.
CEO level. That should be handled at CFO, FM, FC level. COO should be handling all of that before moving up.
Okay.
So and I believe in top-down mindset, right? Top-down
Yeah.
strategies. So if the CFO goes in, his mindset is probably around, first question is, what's the cost?
Yeah.
Whereas the CEO will be, what's the yield? What am I going to get out of it? At least
Yeah.
that's the way I look at it. It could be very simplistic,
Yeah.
but yes, that's
Yeah.
that's the way I think. Yeah. All right. Let's run down to some numbers, right, for our coconuts out there.
Cool.
So, what was the revenue last year? What was the revenue this year? Or maybe let's even do pre-COVID, post-COVID. What do you have for us in terms of
Well,
rev?
in terms of revenue, last year it was 150 billion US dollars. So
Mm.
that was huge. And so they've kind of seen $40 billion worth of growth over the past 2 years. So pre-pandemic, it was just over 100 billion. Now you're talking over 150 billion. So it's been a pretty good 2 years. And so I think a lot of these retail companies, in terms of presenting to investors, it's been much more common to talk about CAGR over the past 2 years, like a 2-year
Mm-hmm.
CAGR, rather than say 2020, because it
Yeah.
was a one-off year, and some companies, obviously, if they have a big digital presence, saw a massive spike. So Home Depot itself has seen 100% growth in digital channels over the past 2 years
Wow.
on a 2-year basis, which is still really strong, right? So, and the dividend as well, which I always like to mention, that was raised recently just by 15%. And so
Okay.
it has a really impressive dividend track record. So over the past 20 years, it's grown its dividend at a compound annual growth rate of just around 36.6%. So that's a pretty extraordinary record
Wow.
for a for a company like Home Depot. So, I think people maybe dismiss U.S. stocks. I find a lot of people dismiss U.S. stocks because of the tax, but when you kind of have that
Mm.
sort of growth in dividends, the dividend growth, I think it really shines a light on how strong businesses can be in the U.S. over time, if given the time. Yeah.
Got it. Cool. And last but not least, tell us a bit on the risk profile of someone that wants to put this Home Depot into a portfolio, right? So this is
Yeah.
clearly not a growth stock, right, where they reinvest because there's
No.
dividends coming in, so on and so forth, so a certain maturity. How do
Yeah.
you see this play? How do you see this play for our users?
I think this is more of a I think this is more of a anchor stock in your portfolio. So you're going to see it provide stability in a diversified portfolio. So you will have some growth in there. I mean, last year I
Mm.
think you guys were up 50% or something ridiculous. So they still did really well last year in 2021. Obviously this year they're down, I think about 10-15% so far this year. But I think the idea of it is it gives you a leader in a space which has a lot of long-term potential. So obviously you're not going to be getting 50-60% revenue growth with high growth stocks, but it's already insanely profitable and it's free cash flow positive and it's operating cash flow positive. So it's one of those stocks that I would say gives you a bit of growth, but
Mm.
it gives you a bit more. It's more of like the stability and the dividend growth, which I like, because it doesn't yield that much. I think it yields about 2.3% or something, but the growth of
Mm.
that dividend is insane. I think in terms of 36% over 20 years.
Yeah.
Pretty amazing. So if you're a dividend person, or if you even want to consider just having a dividend stock in your portfolio,
Yeah.
I think it's one of those that you really have to consider.
So yes, definitely, right. While we could look at this, as you mentioned, as an anchor stock or as a dividend play,
Mm,
right? It has still quite drastically dropped. Right?
yeah,
I think at its highs at 400
yeah,
ish. It's now at 317. Now, what are your thoughts on this?
yeah. Well, I think that's really just been, um, I think, a function of rising interest rates, right? I mean, but
Hmm.
that's happened to a lot of stocks. Obviously, if you think about it, in the relative terms of how it's dropped versus, say, I don't know, a C or a Zoom, it's really not dropped that much. But if you're talking about it from a blue chip perspective, I mean, it's dropped a bit more than maybe what you'd say a Walmart or a Target maybe had dropped. But I think maybe that's, again, focused more on rising interest rates. There is a bit more risk baked in with housing, in terms of exposure to interest rates. But the U.S. consumer is actually very well funded in terms of mortgages, and there's been a lot of refinancing earlier on in the interest rate cycle to take advantage of low rates. And so I don't think the U.S. consumer is actually overextended, overstretched like you found in 2006, 7. And equity, home equity has actually risen about 35% in the past year. So you're kind of seeing the massive amount of wealth being generated by the housing market. And unless you really think that's going to collapse in the next 2-3 years, like in the housing bubble, then I think it's going to be, it's probably going to be an okay situation for Home Depot. So even in the housing crisis of 2007-8, where everything dropped off a cliff, they actually maintained their dividend at the same rate for a couple of years. They didn't actually cut it or stop it. So it's more a question of, do you think this company is, or do you think the housing market is going to crash? My personal opinion is it won't in the next few years. But you obviously need to monitor it, because that's a risk, is that they will be exposed to the housing markets and the big housing markets and how healthy that is and growth there. So so at the moment it's in root health, it's doing well, but there are obviously concerns with rising interest rates and the war, and if there's a possible recession, then that will impact the housing market. So that's something to watch.
Got it. Actually, I was taking a look at the numbers as well. In 2007, 2008, it did not drop by much.
Yeah.
Right. So I think that's good to note, right? So I think even if there is a recession, there's still going to be houses to be built or houses to be fixed.
People are always going to want to improve their home, even if they're not buying a new home, right? So I think it's one of those.
Yeah. No. Awesome. Cool. So I think as a quick, TLDR for our listeners out there, we started off with the industry. Talking about the total addressable market of, you mentioned over 100 billion. Was it? Yeah, more than that.
100 billion? Yeah, 900 billion? Yeah.
900 billion. With Home Depot only having 17-18% of that sector. And it's a growing sector because of what's happening now with hybrid work models in the US.
Yeah.
And that's one of the growth regions for Home Depot. Now, second thing that they did well, which is why it could be a buy for our investors, is the fact that their management is quite forward-thinking. They have pivoted and increased their marketing spend, digital advertising, and you mentioned top 5 in the past couple of years.
Market share,
the e-commerce market share, which is great as well. And lastly, we also then talked about, okay, so the sector is growing. Home Depot is the winner, so you want to invest in the winners. But on top of that, they're giving some really, really good dividend rates. Yeah. Right. So if you're an investor, they're probably in the conservative to mid section, if you will, or neutral profile. This could be one for you, because this could be an anchor. Yeah. Where, as we've seen in 2007, 2008, there still has not been much drop. And the FCF is still increasing, with the dividends still staying still. So I think this could be a good option. Of course, as always, this is just for entertainment, so please do your own research and make your own decision, but this is what we think.
Yeah, exactly. No, I'd also want to put that disclaimer out there. Yeah, this is all sort of, please do your own diligence. This is not personalized financial advice. Yeah.
Yes.
I have my head. So yeah. So
no, of course, yeah.
No, but I mean, I am a fan of it, and I think it is a great company. But obviously, it has to match your risk profile, and you have to do your own due diligence.
Hey, coconuts. So I hoped you learned something useful today. Definitely recognize that investing is a personal decision. We are not giving you recommendations here, but are always happy to geek out with you about different interesting companies and trends for the future. This series definitely has a lot more depth and terms, and we want you to tell us what stock to analyze. So if you have any feedback or ideas, do drop us a line through our socials or email us at hello@thefinancialcoconut.com. See you in our next episode.